Crap, right as we were going live, I hear my computer ding because I had a stop in the Russell that I forgot to take out because I already took profit on the trade. And I'm like about to concentrate on this, like, oh crap, I'm long Russell and I don't want to be. So I had to get out of that.
How about what? Because I've got a stop in above at SPSM, which is the S&P 600 State Street.
Yeah, this was just, oh, did you? Because this was just, I had a short on before. I covered it for a profit. I had a pretty good day trading Russell. And this was the stop for that trade. I don't even remember where or why I put it where it was. And I'm so glad I got out of it quickly. But anyway, welcome to the Trader's Edge. I am Jim Iuorio. Tradier is the Trader's Edge. I'm Jim Iuorio. That's Bobby Iaccino. Thank you guys. One of my favorite shows to do because of the live element and all the input you guys give is fantastic. Also join us at unfilteredinvestor.com. Bobby, there was a Fed meeting today. You saw, and nothing interesting about it, right?
I will tell you the one thing that I found the most interesting, which probably is not of interest to many people. Jerome Powell himself said, we hear all this complaining about inflation in the media and how people are struggling, but the consumers keep spending.
Yep.
And I don't know if that's because the media is blowing something out of proportion, or if we collect inflation incorrectly. That could be part of it. So there's like a lot behind that statement to me where I was like, yeah, Mr. Powell, Mr. Chairman, maybe you should have looked into that all this time when you were chairman, but he didn't. So
he didn't. But by the way, again, I've been saying this with so of you forever. We've been screaming it. Yes, it's K-shaped. Yes, the people who are asset holders are swimming in it right now. We couldn't be any better off than we are right now, both psychologically, because everything's gone through the roof. Granted, the buying power is not as much as it was, but we're still beating the buying power of it. If you're the top 30% and you have houses and stocks and a metals portfolio, you're kicking ass right now. And it's really, it's unfortunate. Like, I want everybody to win. And I've been screaming about this forever. Anyway, let's bring our guests on. You guys always, I've said this a million times, I'll say it again. You guys can watch Bobby and I for the last 20 years, think we're full of shit, but you cannot deny that we get absolutely fantastic guests. This is one of our favorites, our friend, Tony Nash. It's called Complete Intelligence, right, Bobby?
Yeah, it's complete intelligence.
He is complete intelligence. Let's bring on Tony Nash. Now, before we go, so we were talking about all things Italian in the green room before. So at the earlier part of the week, I'm starting to feel a little rundown, a little bit of ticklish throat. And so me, like what all good Dagos do, I start eating garlic cloves by the whole and start running oregano oil in a mist. Running oregano oil in a mist. So between me and the oregano oil, my entire house smells like a pizza parlor. But so this wasn't even the bad part. As I've said a million times, I now coach basketball, and I'm just pounding down garlic for 2 days. And all of a sudden, I look at my watch. I'm like, oh crap! I have a game tonight. I coach with like 3 of these lovely women, and I have to sit next to them on the bench, just smelling to high heaven. So I sent them a text saying I'd like to apologize in advance. All right, but anyway, there. I guess you can't. Once the Italian blood is in you, and that any comment on that? I guess.
I won't be attending the game tonight, Jim.
Okay, good. Right. Do you believe that eating, Bobby? Do you believe that eating garlic has antiviral properties?
Yeah, I mean, I think there's something. Okay, so I'm going to call it anisin, but that's not what it is.
Anisette.
What is it?
Anisette.
Yeah, I think that's what they made anisin out of back in the day, but I don't know. I mean,
anise was what? Yeah, anisette is the spice. Anise is the drink, right?
Yeah,
like licorice.
Anisette is the drink.
Yeah, exactly. Right. Yeah,
it's an anise flavored liqueur, but there's a compound in raw garlic that goes away when it's cooked. It's what gives garlic that burn, but it's also theoretically antibacterial and antiviral. The other thing is oregano oil is showing a lot of properties lately. I don't see any problem with that as long as you're having chamomile tea and pastina with it, which are obviously the right cures.
Clearly. Tony, what are your cures? What do you do when you get a little bit of a cold?
Oh my God, I take a lot of zinc. I
take zinc too.
Yeah. My wife gives me a cocktail of stuff every day, and I don't even know what it is. It's all this preventative stuff.
How do you know she's not trying to kill you?
Quercetin and a bunch of other stuff. And she's too nice. I mean,
it's always the nice ones. Do not trust her.
She's too nice. She's been with me for almost 30 years. She's put up with my crap for 30 years. So I, whatever. She's too nice.
It's called
We don't
Allison.
deserve them.
What?
It's
We
called
don't deserve them.
Allison or Allison, the thing in garlic. It's called Allicin. It's ALLICIN.
And is it really proven to have antiviral or immune system properties?
So this is right off the top of my head. It's an organosulfur compound formed when garlic is crushed or chopped, often related sulfur containing. I can't even read it. Other related sulfur containing compounds like angione and various organosulfur compounds also contribute to antiviral effects, which have been studied, again, off the top of my head, against viruses such as herpes, influenza. Jimmy,
Great. Good that you're taking it in.
SARS-CoV-2 in preclinical and some clinical contexts. So it has been studied and has some antiviral effects.
Welcome, people, to Virus Talk. I'm Jim Iuorio. That's Tony Nash. Please send in your home cures for any sort of virus. Tony, apparently there was a Fed meeting today. Bobby and I talked about a second.
Evidently there was, yes.
I think it was a massive nothing burger. I think the much bigger deal regarding the Fed is the increase of the balance sheet, which they have been doing by buying short term. Also, the new Fed chair, Rick Readerer. I always wonder how many syllables you put in that. Not Rick Reader, Rick Readerer, correct? What is
Rick
it?
Readerer? I thought it was Rick Reader.
Rick Reader? Okay. It's like I always,
so.
Yeah, I always have this same trouble. Like when I'm writing out the word banana, I never know, like banana. You never know when to say it exactly.
Yeah, I'm going to remember that now.
So do you think there are any actual real massive implications from either of those things, balance sheet expansion or the new chair?
Look, there were two dissenters. And I mean, we went so long with unanimous decisions. Showing two dissenters, people kind of yawn at it now, but just go back 6 months and that was kind of a big deal. So, I do think we're creeping toward a very divided Fed. I think we're creeping toward a Fed that is going to have to stay dovish, despite some of their inclinations. And you just look at
can I stop you there and ask you, just because I want some clarity on that? They have to stay dovish because of the labor market or because of the president?
Both. And housing. Okay.
Yeah.
I think we're going to have to, and that's not all interest rate, that's balance sheet, right? And if we're going to deliver affordability, and I mean we as America, if we're going to deliver affordability in housing, you have to buy long debt so that you can reduce the cost of owning a home. Like it or not, as socialistic or not as it is, that's something that was started in 2008, 9, whenever it was. And it's a really difficult drug to get off of. And so, there are a number of different things happening to make housing more affordable. And I think when the Fed will expand its balance sheet, I think that's one of the things that will help.
So first I want to put up Jerry Patrick's comment. He says you have to crush it to release the good stuff.
Hold it. I chopped it up and took it like a pill, Jerry. That doesn't work?
Yeah, that does work. That does work, Jimmy.
Okay,
I don't know if Jerry thinks it does, but I know for sure that it does release the ricin that's in garlic that helps you kill the cold or kill yourself.
Because I'm going to couple up.
No comments on my black shirt?
No,
I told you.
You have Italian blood in you, though, right?
What's that?
You're part Italian, I thought.
I am. My grandmother's grandfather, Giuseppe DeMarco, came over from Naples, moved to Brooklyn, working for the railroad. He was sponsored, worked for years to get his wife and his 3 kids here, sent for them. They got on the ship. By the time they arrived, he died from tuberculosis.
Geez.
That sucks.
So because he was sponsored, they got jobs for the kids on the railroad and they moved up to upstate New York to Mechanicville. And I have family that's been there ever since.
Wow. My grandpa
should have opened a daycare center.
Yeah, it could have. I mean, that would have been the easy way, but this was 150.
All right. So there's a question in the chat I want to bring up since you guys were talking about, and then I want to talk about housing with you, Tony, if you guys will allow me. Please. Remo says Powell seemed quasi-dovish. Do you guys agree? Both of you. Tony, you first.
Yeah, I think he can't appear to be hawkish. This is where he is because, like it or not, he's got an investigation going on, so he doesn't want to upset law enforcement too much. He's ending his term as chair, so he has to provide an environment for transition. if Reader is the guy who's coming in, he's a bond market genius. Reader, he has $14 trillion under management. He's a CIO for BlackRock, right? So this is a guy who has more under management than any country except for the US and China, right? And so, this guy knows bonds, he knows markets, he knows global, funds flows and all that stuff. And so I think whether he's the next Fed chair or not, I think they're trying to make it look like we can have a transitional environment for a potential dove.
Jimmy, what do you think?
I think that that's the truth. I think that Powell is actually dovish. He's more dovish than probably I would be. And I think that the normal inclination for a proud man is, if the president wants you to be dovish, to push back with more hawkishness. And to his credit, he hasn't done that. And I will point to the fact that he is buying bonds again. He understands that the labor market is relatively weak. He understands there's affordability crisis. He understands that the Treasury has to roll over $9 trillion worth of bonds this year, and they'd love to do it at lower rates. So I think implicitly, he's almost kind of threatening the 10-year to keep that from going higher. So I believe that Powell, again, in 10 years' time, I will stick to my guns that Powell's term was essentially a failure because he swung and missed by such a large amount in 2021, and he put us on our back foot. That doesn't mean that everything he does is bad, and I think right now he's doing a good job. Is that an effective answer, a good answer?
Yeah, I like that answer. I just want to
He's
point
doing
out
a good
that
job. I don't think he's doing a great job, though. I mean, Trump's pretty annoying, but he was too late in terms of cutting.
Yeah.
And so, I think
true.
he was way too late, and I think we should be in a different rate environment, probably 50 to 75 basis points lower than we are.
But also
right now.
way too late in terms of hiking in 2021 as well, right? He was,
yeah, of course. Yeah, exactly.
Well, that's the one that's more dramatic.
You
to
have
me.
600 PhDs process stuff, and you're going to have a decision in a decade, right? Because they're all going to come up with reasons not to do something.
Yeah.
So just so you guys know, Kalshi has Rick Reader at a 40% chance of being appointed chair. Kevin Warsh at 29%. Christopher Waller at 15%. He was probably at 11% till he dissented.
That's
today.
what I was about to
Then he went
say.
up to
Today was his
15%.
big jump.
And I, of course, use Kalshi because I think we have a better chance of getting a sponsorship deal with Kalshi than anyone else.
Okay. By the way,
that's
you hear
why I
that,
use it.
Kalshi people? We could talk about your thing all the time because we actually do use it.
I do use it. I actually still have. I have money on what's his name? God, now his name's escaping me. The kid from Oklahoma who's the Rams quarterback now. Driving me crazy. I can't remember his name.
Matthew Stafford?
Yeah, Stafford. I have money on him with Kalshi. Kalshi, that he's
not
going to
a
win the
kid.
MVP.
But he's not a
I have him
kid.
winning the
He's a
MVP.
kid to us, I guess.
Anyway, sidebar. So the housing thing. We had Carol Roth on a couple of weeks ago, and I thought her proposal, I had never heard anything like this before, and I thought it was at least wonderfully interesting. And what she said was she doesn't think there should be any adjustment by government, except banks should be forced to take the existing loan and transfer it to the new buyer and then create a second loan for whatever the difference in the remaining loan plus the home price or the increase in the price of the home. You follow? Did I explain that okay, Jimmy? You know
I think you did. Yeah, I get it. You get it, Tony, right?
Yeah, so in other words,
Sure,
there's maybe let's say it's a $700,000 home. There's $450,000 left at 3%. The new buyer can assume that. And let's say the house is now worth 800, right? So they have to finance another 350. The bank can now set that loan at whatever rate is fair per the market.
Before Tony goes, can I address that real quick? And what I
Yeah,
thought
please.
at the time, whenever you say force banks to, I say provide massive incentive for banks to.
Fair enough. Whatever.
Yeah,
Good.
but anyway, okay, Tony. Yeah,
We know it's the same thing anyway, right?
I know. I guess.
We
So.
do.
It's a man.
And actually, I'm saying that right now because I know Widge is watching, and I don't remember what Widge thought about that. But go ahead.
I mean, I think it's fine. I don't have all the answers. I just think we have a number of forces in the housing market. We have a bunch of baby boomers who, whether we like it or not, they're dying off, right? So there's capacity left over. So do we destroy that capacity because it's old, or do we inhabit that capacity? It depends on where you are. If you're on the West Coast, where they're like in Portland, Oregon, there's an urban growth boundary. So you can't move outside of a certain part of Portland. So those homes have to be reused. But
Is anyone
if you
moving
live-
into Portland these days?
I don't
Go
know.
ahead.
I have the wrong color hair to answer that. But I live in Houston, where you can build anywhere you want, right? And so, you have, you have blight, you have all this stuff where people, abandon neighborhoods and stuff. So, there's one extreme to the other, and I think we do have to contend with whatever is going to happen with those boomers who have their main home, their second and their third home, and all this other stuff. And we have to somehow unlock that so that we can have capacity in there. And I don't mean by we must, I don't mean we have to force them. I think we just wait. It's a waiting game until people move on, and then their kids get the home and they sell it, right? Because they don't want to move into their parents' home, and they don't want to have their parents' vacation home. They want to have their own stuff.
This boomer's selling one of their homes in April. I've already agreed to sell it. So I will
thank you for your service.
From 4 to 2 in the matter of 2 years. So I'm doing my part. But anyway,
you're doing your part. Good.
Yeah.
Yeah. So I think we can come up with a lot of synthetic and managed ways to transition this. But at the end of the day, it's a demographic issue. We have a big baby boom cohort. We have a big millennial cohort. And one has to get out of the way so the other one can thrive.
Bob.
Yeah, I think the interesting part about her idea, and we get a lot of great ideas on these shows, like when we had Steph Pomboy say that U.S. Treasury should be completely tax-free to American buyers. I thought that was another great idea. These are sort of America First policies. Yeah. But Carol's point was the people who aren't going to sell their homes, whoever owns that loan at that point, they're getting that 3% either way. So why not allow the transfer of the home, a little bit more money to be made off the new portion of that loan? I just thought that was really clever, because most other things I can think of, Tony, are socialism at their core. Now lowering rates right now, in my view, prices have not come down much. And I just don't think that the cycle of elections allows us to go through enough of a drop in home prices to have an effect. What do you think about that? Do you think that the price of homes should just go down? Let me throw something at you. I remember during the housing peak, was that late 2006, 2007, somewhere in there? My sister had just built a house and it cost X amount of dollars. A couple of years later, she's like, we are way underwater here, but we're living in here. We're raising our kids in here. So no big deal. Now they're kids. They have one kid left in high school, 2 kids out of college already. And they're like, yeah, we're gonna downsize soon. We're fine. So that's where that thought comes from for me.
Yeah, I think a lot of things, I guess, with housing, but I think part of it is, it's not the price of a house. I don't think it's the monthly payment that most buyers are interested in. Mm-hmm. So whether a house is $500,000 or $3 million, it really depends on whether that buyer can afford the monthly payment. And, people want to mock 50-year mortgages, but, if it gets monthly payments down, I think people will feel more comfortable with it. Again, I'm not advocating it. I'm just trying to think, how can we make everyone happy? You can't make everyone happy, but if you can have your monthly payments go down, people can always accelerate their payments if they want to pay off a 50-year note early, right? So, but again, I don't think it's necessarily the house price, because the price of a house is at values that many people wouldn't have really conceived of 10 or 15 years ago. And so the sticker price itself isn't the problem. I think it's the monthly payment. That's why I think long rates are very, very important.
So this is going to be a question to both of you, because Donald Trump's come out with a couple different things, and I think most of them have been absolutely asinine. The buying more mortgage backs, trying to force the Fed to lower rates, letting people use their 401k money for a down payment. By the way, in a normal world, in a vacuum, I wouldn't be that opposed to that. The mortgage backs I would, but not the 401k part. I wouldn't be opposed to it. But when we're looking at a supply side problem, demand side solutions seem ridiculous. Tony, you go first, but Bobby, I want you to weigh in on that too.
Yeah, I'm not all that opposed to it. Like I'm not a purist necessarily. I'm a purist in very few things, but I think on some level we have to transition from this very heavily subsidized boomer environment to something less than that, and there has to be a transition so that millennials can thrive. I'm not a millennial. I'm Gen X, but millennials are going to want the same toys that boomers had, and so there has to be some transition so that they can have the quality of life. I know that's not ideal, but it's just where we sit in the kind of.
Or else they're going to vote in communists like they've done. I get what you're saying completely, right? Yeah,
exactly. We have to have a transition. It has to be quasi-market, and eventually we transition to something that's more realistic when you have a smaller age cohort.
Bobby?
Yeah, this is something that we briefly talked to Michael Green about this. there's something wrong with the downstream effect of the way parenting changed at one point. And I'm not sure, I'm not a parent, so it's very easy for me to say these kinds of things. But, kids have a TV in each room. They have a computer in their pocket or purse.
No, they watch their phone. They don't even care about the TV.
Fair enough. They watch their phone. They have 4 or 5 streaming services. Maybe they pay for YouTube Premium. They were given cars when they were old enough to drive. None of that happened to us. Now, here's the other thing. I also know that what we had as kids, our parents did not have. But as soon as I left the house, my car payment was mine. My insurance payment was mine. My rent payment was mine. Everything was mine. Nothing was supplemented by my parents at all.
Yep.
Now, what Michael Green said was basically this. He goes, yeah, that's true, but you don't understand what a disadvantage they are at now versus where you were at expecting your quality of life. My quality of life went down when I moved out of my parents' house.
Yeah.
I don't know if like kids today expect it to stay the same or not. I'm honestly saying I don't know. So Remo just put up, I think kids don't have capitalist mentality today. I think they are owed. Mike Green has convinced me to kind of rethink that. What do you think? What do you guys both think? You have kids. Tony, I don't know if you do. I don't.
I have 3 kids. 2 are in their mid-20s. They're twins. And I have a 16-year-old. I think kids are not afraid to take on responsibility, but it has to be kind of pushed on them. I think the kids today won't necessarily, like, we just couldn't wait to get out of the house, right? If you're living at home after 18, it was a social stigma. It's not a social stigma anymore. So, nobody ever bought me a car. My parents paid my tuition in college, but I worked all through college. When I graduated college, I remember my first job was on the night shift at a freight forwarding warehouse in South San Francisco, California. It was a shit job. And I remember sitting on my lunch one day at like 2 a.m., writing down a list of things that I wanted. One of them included a car made in my lifetime. I was driving a 69 Chevelle Malibu at the time. I wanted, which I wish I had back. I wanted a car with a radio in it and an air conditioner. These are the basic things that I wanted in my early 20s. A year and a half later, I was living in Europe, and then I started moving around the world for 20 years, right? But these are the low expectations I had coming out of school. I don't think kids have that. I think they want to YOLO, something and be millionaires by the time they're 25. Not all of them, but I think that's partly. But
do you think your parents thought, what a spoiled baby, we didn't have a radio and we didn't have air conditioning? Because that's what I think we're thinking now about kids.
That's my parents thought about us. I guarantee you that they thought we were spoiled babies as well. I mean, every generation thinks that, and every generation is to a certain degree correct, in my opinion, because life has gotten really easy, right?
When I was sent to Europe to work, my parents told me I was rich. And they told everyone that I was rich. I was 24. And, my company sent me to Europe to work. And my parents told me I was rich. Everyone told me I was rich. And I didn't think so. Like, I didn't have any money. But that's what they thought compared to the way they live. My grandparents were migrant farm workers in the Central Valley of California. My grandmother became a sweatshop worker in Phoenix, Arizona, sewing underwear and socks as she got old, right? I mean, this is where my family came from. So, of course, compared to my parents, I had everything even without a radio in my car. Of course, when they were, when I was in my 20s, they had all the nice things. They were boomers. They had the cars in the house and everything, right?
Bobby, how do we wind? Because this is a very interesting macro phenomenon. I agree with you 100%. But how do we wind this back to market and to things like that? What do you think, Bobby?
We need a recession.
I think this is an easy segue to Greenland. I'm just kidding.
Is it?
There's no
I was like, wow, he's going to be a magician right here.
Well, what I'm trying to figure out, Jimmy, is not only like housing affordability, because if the government gets too involved in one way or the other, it's going to be the wrong thing.
Of course.
That's just the way I look at it. And right now, winding it back to markets, I don't like home builders at all right now. And I do like small caps, and I do like, consumer discretionary, because I don't think they'll buy houses. And I think no tax on tips and no tax on overtime is going to support some spending. And when I heard what Powell said today, I said what I said about it, that I think we're collecting inflation data wrong. And I do think some people are suffering, but I also do think they're still spending.
So can I stop you there?
Please.
I'm sorry, but talking about Powell and inflation, this bugger for the last year has talked about tariff-induced inflation. And now he's coming back and saying, well, we've topped it out, after he scaremongered for a year. And the Fed itself, in a paper in October, said that tariffs added 0.5% to PCE inflation. Okay, 0.5%. So this guy has scaremongered tariff inflation, and everyone has scaremongered tariff inflation for a year, and before that in the election. And now he gets here and goes, well, we're probably topped out, so we're going to see prices fall this year. Like,
hey, Jimmy, do you know any founder of Complete Intelligence who from day one basically said the tariffs weren't going to cause inflation?
Not only that, and I would say that you were the torchbearer on this, but Jim Iuorio and Bobby Iaccino were not far on your heels talking about how dissipated the inflationary effect of tariffs could be. And even if they weren't, they were one-time price adjustments. It's literally not the definition of inflation. Inflation is a rate of change. A one-time price hike is not a rate of change. This whole thing
most of it was absorbed by importers if it came over at all. Part of it was absorbed by exporters. Part of it was absorbed by importers. Some of it seeped through to consumers.
Of course. Yeah, which is exactly what we said this entire time. And I'm not even looking for all these. I was going to say I'm not looking for attaboys, but you guys know I'm always looking for attaboys. I just am. Sorry about that. So any attaboy you go. Oh, by the way, Widge, I meant to tell you, we did look at your comment before. We didn't read it out loud, but I know you disagree with us. And again, you're still, anytime you disagree with me, I look at what you say a little more closely and I appreciate it. But anyway, let's take a quick time out. Luis, will you put the banner up there? So this is the part of the show where I ask a favor of you guys, and I really appreciate all the support you've given us. Please try Tradier Pro for 3 months for free. We talk to people who trade options for decades and those who've traded options for days, and they all say the same thing about Tradier Pro, that it is absolutely top flight options program. All you have to do is scan that code with your phone, sign up for 3 months for free. We would appreciate it. And now back to the show, Bobby.
So let's go into what I was talking to you before you brought up all those key points about tariffs. I like consumer discretionary. Chain Owners Excisal disagreed to a certain extent. I do like small caps because I think if there is any more tariff volatility, the small caps are going to be fine. And I do think that whoever the new Fed chair is going to start cutting rates immediately. I really do. I don't think Trump is going to sit down and say, I can't say this in public, but you're cutting rates right away, right? So absolutely. Do you think I'm right or wrong on that thesis? What does Complete Intelligence say as a firm?
I think you're right. We have a weekly newsletter comes out over the weekend. Right. And we've been talking about the anti-dollar trade, which here we are, right? And, we hear people saying it's the end of the dollar. It's not the end of the dollar. Okay. The dollar is trading at 90 on the DXY when Trump left office. We have plenty of room to get there. I don't think he wants it that far down, but he's comfortable with a little bit of downside in the dollar. It helps U.S. exporters and so on and so forth. But, it's not time to panic. It's not the end of fiat. It's not, whatever. Gold's not going to 25,000 or whatever. So, but we've talked about the anti-dollar trade and what happens with it, which is metals, which is what we're seeing, which is, we look at things like small caps. We look at things like eventually it's going to hit emerging markets, but it's not there yet. You saw what happened with Indonesia overnight. I mean, there's a lot of.
Hold on, I didn't see what happened with Indonesia overnight.
Fell 8% in about 30 minutes. It was the first time it had fallen that far in 9 months, which I thought was funny to read, but fell by 8%. They stopped trading. So, there's always nervousness about certain emerging markets. So, but we've seen markets like Brazil just take off over the past couple of months, right? And so, there is this sense that the dollar, it's kind of dollar off time, which is fine. We can still kind of do other things at the same time. Tech's taking a little bit of a pause, but hey, Tracy, tech's taking a little bit of a pause, but it's going to come back once we see a more dovish Fed. We're going to see tech come back, and it's going to be fine. We're going to coast for a while.
Okay, let's talk about then the dive into the tech trade, because I I'm not as interested in the makers of AI anymore. NVIDIA has obviously had been some shake and bake because it was down 20% a couple weeks back. I personally think it was going to broaden out. And one of the reasons I bought small caps because I thought it was broadening out to the companies that use AI effectively. And I think that small companies probably are prone to do that. But also silver, copper, platinum, palladium, they have been my tier 2 AI trades, not necessarily, and the debasement trade as well for those metals too, but there's a component of the AI trade to it. What do you think when you look at the metals complex and the AI trade? Do you see crossover as well?
Yeah, of course. Yeah, I mean, I think what we're going to start to see in 26 is a requirement from investors to see AI effects on large companies. So what are you, company X, doing in your administrative overhead to utilize AI and cut your people in whatever department, marketing, accounting, whatever, right? And so I think, and I hope that investors start to do that because now's the time, right? I mean, this stuff it's not 2023, it's 2026. It's not as new as it was then. All the security issues and everything else are largely addressed. So those companies that are debating whether or not they let their staff use Copilot or something, I mean, they're way behind, right? And my team, we use AI platforms for literally everything that we do every day. It's like a coworker. So we do things 4 times faster, if not more, than we would 2 years ago because of these tools.
And
right?
do you think you've decreased headcount or not built up headcount because of AI?
Yes, absolutely. Absolutely. And it's enhanced our capability a lot. And so if you're a company with 100,000 staff, you should probably have 65,000 staff or something like that. I mean, there's so much overhead, right? And at some point, I'm not a UBI guy, but I think at some point, some of that has to be slowed down. They have to tamp the brakes on that because once people realize what they can do, I think certain people are going to want to go faster. But there's also an age thing, right? You have this baby boomer demographic that's retiring that you don't want to be seen as being ageist and kind of pushing people out. So it's kind of a balance right now of what happens. But again, I hope that 2026 is the year that analysts are pushing CFOs really hard, not in tech companies, but in Main Street companies saying, what are you doing with AI? How are you cutting headcount with AI? How are you raising your productivity with AI? And rather than saying, hey, we're buying some NVIDIA chips, people need to be saying, hey, we're cutting 15% of our marketing workforce or whatever because we have these AI tools that are doing this stuff. I don't mean to pick on marketing. I've mentioned it a couple times. I don't sell to marketing people, so it's a safe space for me to talk about headcount cuts. But I don't have anything against marketing. There's just a lot of marketing AI tools out there.
Well, here's where I want to throw this. And if you could, Luis, there's 2 comments at the top of the comments there by Shadow Pro. And I was hoping Shadow Pro is in here because I was just going to bring him up as an example because I happen to know who he is and we communicate on a personal level. So he says, anyone who manages agents or databases, Workday can be interesting or MongoDB. And then afterwards he put, whoever owns the data owns the flywheel. Okay, I just want to put those 2 up. Then I want to propose this. How does a company decide who to go with? And that's based off of conversations I've had with Shadow Pro, where he's working on some things and that I think are actually going to be, really life-changing for people if he actually gets them out there. He uses one AI for one thing, one AI for another thing. This AI does this better, so I blended with this AI. I know that on a personal level. So, I mean, I'll tell you that like ChatGPT is best for finding the best happy hour near you. Grok is best so far for science questions. And Claude is a better writer than Perplexity is. Perplexity seems to have more knowledge on treasury yields and the whole interest rate market. And then Shadow Pro tells me Gemini might be better than all of them. And I'm like, what the app should I be using? Like I go out of my mind with this. So you deal with companies. How do you tell them to manage that? Because one day one's better and then 2 days later, the other one's better.
They're afraid of it. Every company I talk to is afraid of AI. Everyone. Unless it's automating warehouse work or doing something in marketing or whatever. Anytime you talk about core administrative work, they're terrified. They want headcount. They're afraid that things are going to mess up and so on. And companies don't manage their own error. They don't record and look at their own error. And so we do, just a shameless 2-second pitch for CI. We do stuff for corporate finance. Of course, we forecast markets, but we do audit monitoring, and we do forecast and budget variances for companies, right? And generally, people in corporate finance and accounting are very afraid of AI. So what you get in your typical ERP AI package is really a trend forecast or something like that, right? I mean, obvious anomalies, those sorts of things. So your SAP, Oracle, whatever. It's not something that is more sophisticated AI, because they're very afraid to apply sophisticated AI because they'll lose control. And the problem with the environment that we have in many companies right now is the illusion of control. People believe that they have control. You know, COVID is only 5-6 years ago, right? And people believe that they have control. I've told this story a couple times. I don't think I've told it here. Before COVID, there's a very large medical supplies company. We told them that some of their products were going to increase in price by 5 times, in April of 2020, by 5 times. They had a status quo price, okay? That product increased by 7 times. So we were 40% off, they were 700% off, right? They had no control over the market. They were effectively buying spot prices, right? I mean, contract prices, but effectively spot prices. And so these CFOs, supply chain people, accounting people who believe that they have control, they live within a pretty mundane environment, but they're shocked by shocks, right? And this is the problem with AI, is it can imagine shocks and help you understand shocks, at least the way we've built it, right? And it can give you, probabilities on all that stuff. And so it's easy, and I'm hoping this kind of goes away with the boomers of, oh my gosh, everyone lost in the global financial crisis, or everyone was shocked by COVID or whatever. It's like, no, not everyone was shocked, right? People knew the GFC was coming. Some people had enough advance notice with COVID to make adjustments. So that kind of commiserating that everyone is a loser, I'm hoping that we fix that with AI, and more people are prepared for some of this stuff. And we've got so many layers in some of these big companies that AI can really take out. So again, that's what I'm looking for in 2026, is big companies applying it to have real gains. And I'm hoping that investors have that as an expectation, not a wish, because the technology is there. It's ready, it's there.
Is what I'm hearing that a corporation who's afraid of it, and you could do a 5-minute plug for Complete Intelligence, by the way. I don't think Jimmy objects either.
No.
But you're basically saying that corporations have to break it down and say, okay, we don't know what we're doing, but we know we need this. So we need to find somebody like Complete Intelligence or another company that does the same thing to walk you through it and help control sort of the volatility of AI itself.
Yeah, I'll give you an example, Bobby. And then we can talk about Greenland. I know you're going to talk about Greenland. I
do want to talk about Greenland.
Too much, but so we came out with a budget forecasting product called Budget Flow, using AI, doing all kinds of stuff. I have a video demo online. And for a couple of years, we talked to customers about it. And consistently, they said, hey, we'd love to use AI for our forecast, but our historical data sucks. And we're going to have to engage some auditor, Accenture, or somebody. It's going to be an 18-month process, at least, before we have initial finance and remediation, so you can start doing this. And we're going to spend, a few $1 million, at least, right? So we thought about it, developed something over about 6 weeks. Today, in 12 minutes, I can give you a full audit of your company, okay, in 12 minutes. And it's $5,000, right? Less than that, depending on the size of your data, right? So rather than spending $8 million and waiting 18 months, I can tell you for $5,000 in 12 minutes where the issues are in your account structure. 12 minutes, okay? So
that's unbelievable.
It is unbelievable. And we did this and we have this and it's ready to go right now, right? And so companies aren't aware that this stuff is available. So anyway, that's called Audit Flow. Again, go to completeintel.com for people who want to know more about it. So Greenland.
Jimmy, you had a question about Greenland? Because the more I look at it, the more I like the idea. Okay, so he's got technical difficulties because he's, I think, 2 months older than me.
So, Bobby, let me give you a historical analog, okay?
Please, because again, the more I look at it, the more I love the idea. Go ahead.
Yes. Panama Canal.
Yeah.
Okay. The Panama Canal is the perfect analog to Greenland.
Oh, I love this, by the way. I haven't thought of it. I hate that I haven't thought of it because it is absolutely true. Go on. Yeah.
The Panama Canal was a geographic necessity for the U.S. The French had tried it and they failed. The U.S. ended up buying it from the French and building it. If they hadn't bought it, the Germans were going to buy it and do it. And at the time, the Germans were a global power, right? So the Germans, in some alternative history, could have owned the Panama Canal and run the Panama Canal, and they would be this, geological power in terms of trade and governance and military and everything, right? But Teddy Roosevelt came around and bought it for, I think, $30 million or something, and built it out. Now, at the same time, we were also thinking about going through Honduras, I think, or Nicaragua, one of the two, for a canal route, but we ended up not doing that and going through Panama. So when we look at Greenland is a geographic necessity for us, okay? It's also a geographic necessity for the world. And so if we think Donald Trump is ruffling feathers over Greenland, you should see how Teddy Roosevelt ruffled feathers over Panama. Panama was a part of the country of Colombia before the canal, right? And unofficially, the U.S. stirred up a coup in Panama, so they became its own country, right? Did it really? I don't know. I think it's all, a little bit still cloudy, but Panama became its own country. They put together a treaty with the U.S. The U.S. had really sovereign rights over a lot of Panama until Jimmy Carter gave it up, which is one of the stupidest things we did last century, right? So Denmark is poorly governed. The people have a lot of historical claims. Greenland is poorly governed. So is Denmark, but Greenland is poorly governed. The people have been abused by Denmark for decades. Some of that started to be fixed probably 20 years ago, but they haven't had the development that's needed. Denmark doesn't have the money to give them the development that's needed. The US does, right? So I think a plausible, maybe not likely, but a plausible outcome is that the US facilitates Greenland to be a sovereign nation state. And with that comes an agreement that the US has sovereign rights over certain parts of Greenland. And would it upset Denmark? Yeah, oh well, right? I mean, they're not a powerful country. They have been an ally to the US. Colombia had been an ally to the US before the Panama Canal, right? So
by the way, when you said Panama and something kind of murky, you're talking about Wild Bill Donovan and Alan Dulles. You're talking about us sparking some sort of revolution that Panama
bringing up the Dulles brothers. I like
more like John Hay, like those guys.
Okay,
kind of 1903, something like that.
Oh, it was earlier than CIA. Yeah, right. Okay, so I was getting my timeline wrong.
So the U.S. was trying to negotiate a treaty with Colombia. Colombia was being difficult. And so I suspect that Hayes said, we're just going to make Panama independent. And it's a series of events that just happened.
Yeah. I love
Dylan
that.
put up a funny comment. It made me laugh when I read it. Dylan said, is it Greenland or is it pronounced Iceland? That was just a misspeak.
Same thing. I mean, really.
Yeah, I just thought that was funny.
By the way,
everybody was telling me Iceland is green and Greenland is ice. I always remember that.
Tony's breakdown of that was the best breakdown I've heard on the entire thing for this whole stupid episode. Thank you so much for that, Tony. That is an outstanding takeaway. Can we talk about the bond market real quick, Bobby? And then you'll probably have to goodbye us. This will be my last question. Okay, 10-year stuck in a range. I believe 10-year, it's about this massive amounts of issuance that have to come forward and the Fed that's implicitly saying, oh, we're not afraid to buy bonds anymore. Is that why the 10-year stuck in a range, and what could happen to it in your mind?
You're asking me what could happen.
Yeah.
I mean, anything could happen. It depends on who becomes the next Fed chair, right? And so once we have an idea of who the next Fed chair is, if it's Warsh, it's going to get harder. If it's Reader, they're going to push it down. They're going to push yields down, right? And so
they'll do it. They have to do it. They have to do it by buying bonds, because if they do too much on the short end and they're worried about inflation, then bonds are going to get hammered. Okay, that makes sense to me too. So when you think that there's a level, and Bobby, this is a question going to be to you too, and it'll be my last, is that what's the level on the upside where the Fed is like, shit, we got to buy 10-year again? Is it 4.8? Is it 4.9? What do you think, Tony?
I think it's probably lower than that. I mean, I think
Yeah,
it's
thanks,
4.5,
4.6.
Yeah.
4.5, 4.6. I mean, I think they're
Yeah.
more sensitive than we want to admit.
So there's no
Here's why I
reason to
think
sell
4.6.
bonds.
I think 4.6 tells them that we're above 4.5 and we're staying there and going in the other direction. You know,
Yeah.
4.5, it's like, yeah, we touch it. We might go back to 4.45,
Right.
4.40.
Yeah,
So I
that
think
must
4.6
be the
they're like,
reason that
okay,
the
back
threat
on
is
that.
out there. Because if you talk about Japan having problems, they have $1.2 trillion worth of bonds that may need to be sold. We have basically 11 trillion that need to be sold. The 9 trillion of it is a rollover, and I know it's a little bit different, but we're like, why isn't everybody selling bonds? Oh, because the Fed's back there saying, you want to sell bonds? Okay, we got our guns ready.
Yeah, so I remind people of this all the time. Not all the time, but pretty frequently. Do you remember when Yellen was Fed chair and she said, look, I'm doing all this monetary. You have to do some fiscal, right?
Yeah.
And then when she became Treasury head, she did all this fiscal and people got lazy about doing monetary, right? And so you get these imbalances based on what people, who occupies the chair. And so we need to come back to some middle ground, right? We need to do less fiscal and more monetary and come to some balance. But we had way too much monetary, then we had way too much fiscal, and now it needs to, meet in the middle somewhere.
That actually sounds great. Bobby, you got the last question.
Two more. I just have one quick question, Tony. Does complete intelligence say when gold's falling?
Yeah, we do. I didn't look at it before this, but I'll check it and I'll post it. I'll tag you on it.
Yeah, put a tweet up and tag it because I want to know where you guys are projecting gold kind of like rallies. I mean, you guys are not picking highs and lows, but you have a pretty good track record.
We have a pretty good track record.
Modest
and for our market stuff, we transparently publish our error rates on every single thing we forecast. Okay, right. So we're not gaming this. It's not a trust us bro thing. So I'll tell you what our gold forecast is. I'll tell you what our average 1 month forward air and our average 3 month forward air is. I'll send that out after this and I'll tag you on it. Okay.
All right. So I want to do Luis, I want to put up 3 comments real quick, ending with the one I asked you for earlier, Luis. The first one is from Doogie here. It says a tariff is a one-time price adjustment, except we get a new tariff threatened or announced every week, it seems. Fair point. So, I don't worry about it until it's announced because none of the tariffs caused inflation anyway.
Yep.
The second one here is Widge saying, yay, free markets, which I always love when Widge is slightly sarcastic in his quotes. And the last one is for me, Tony. I just want to put up, Widge put earlier that we never had the threat of a draft over our heads. I did.
I had to do selective service. I didn't serve, but I had to register for selective service.
I'm just saying, I know Jim did too, and he's not here to say it, but I did have a threat of a draft over my head for a lot of my childhood.
What year?
Now, maybe he means something different than I mean. I mean, we had a house without heat till I was like 10 years old in Chicago.
Yeah.
We actually had an old wood burning stove. We snuck in the house. We weren't allowed to have it there, but we had it there anyway. And it wasn't actually a house. It was a 3-story building. But anyway.
So when I graduated from high school, the U.S. invaded Panama, and some of my classmates went to Panama for that. I mean, I know it was kind of a rollover, but it was a real action. And then we had the Iraq invasion and, so on and so forth. I have a good friend who was in the first wave going into Iraq. There was never a draft, but having those things was real. I do think that millennials had that with all the activity in Iraq. I don't think it's, I don't think this is a millennial problem. But I do think that there's some weird things that have gone on with Gen Z, and they just kind of need a push. And I remember, Gen X, early 90s, people saying we were lazy and, all this other stuff. So I don't necessarily try to make those type of broad categorizations of kind of generations. Because again, I remember I came out of school, I wasn't making much money. I was working shitty jobs, and, people were saying that my whole generation was lazy. I just think it's a normal thing that happens in the cycle.
Yeah, Widge just said my comment was about boomers versus Gen X. We didn't have that experience. I mean, again, I did, but before I talk us out, Tony, which will be a big rant on all kinds of stuff.
Great.
Do you think working on Greenland, and if we end up with it, gives China the impetus to say we're doing the same thing with the Chip Island?
No,
Taiwan.
Absolutely not. No,
they're not related to you.
That analogy does not work. So,
okay, tell me why.
Social media is a really funny thing, because when I was talking about Greenland last week, people said, well, then Mexico should take back Texas and Russia should take back Arkansas. here's the problem. Texas was an independent nation state that voluntarily acceded into the U.S. in 1845. Okay, so Texas became a part of the U.S. Alaska was purchased by the U.S.
Purchased by Russia.
So
Russia, yeah.
There's a transaction there, right? I think Hawaii, I don't really know the history, but Hawaii was probably taken over by the U.S. So you could probably say that that's maybe more like it. But Denmark, I know people have gone to Greenland for centuries, but some guy landed in Denmark in 1720 and claimed it for Denmark. So there's no bill of sale. There's no, treaty. There's nothing. Denmark just kind of took control of it. And then they tried to, have the Inuits sterilized, right? And so they didn't even want the locals living there. They wanted to populate it with Danes, right? And so, it's just really weird stuff that happened, very European. And so, I just think that there is no claim that China can make on Taiwan because it has been an independent nation state, since 1949. I think there has been we have this status quo agreement about kind of one China, which I believe from the US perspective, means there's one Chinese people, not necessarily one Chinese state, okay? Where the Chinese government sees it as one Chinese state, where the US sees it as a nation, which is a people. Right. The Chinese government sees it as a state. I don't at all believe that this means that China will take over Taiwan at all.
Thank you guys for joining us. This is the Trader's Edge. Jimmy had to go coach basketball. That's going to end soon. Luis, if you could put up the banner one more time. If you guys like these shows, just do this thing. It's 3 months free. Okay, just hit that thing with your phone. We're getting compliments about the discussion. So if you guys think it's a great discussion, try this for 3 months. There's no harm in doing it. You can cancel it after that. But I really want people to support the show because we like doing it. We want to keep doing it. So, Tony, one more time, where can people find you? By the way, the market, Complete Intelligence, the market stuff is ridiculously affordable. It should be more expensive, but I'm not going to tell you to raise the price.
$25 a month for our premium package. You can come in at $10 a month, right? So, and you can see it for free. We have a free. So you go to CompleteIntel.com. You can try it for free. No credit card, nothing. I'm on Twitter at Tony Nash Nerd, so you can follow me there. But please go to CompleteIntel.com and try us for free. And 2 last disclaimers. I am a client of Complete Intelligence. I will get no money if you join them, and I don't want any. So, Tony, thanks again, bud. Thank you, buddy. This was the Trader's Edge. We'll see you guys next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.